Hello everyone, on behalf of the Market 360 advisors here at Stewart Peterson, I'm Bob Davenport and this is your Dairy Week in Review for August 1st, 2014. So to start out, let's take a look at where our CME dairy components settled at the conclusion of this week's trade. It was a pretty solid week overall, with blocks finishing at $2 even, up 3 cents. Barrels also settled at $2 even, up 4 3/4 cents on the week. It was a down week for cash butter finally this week, which settled at $2.40 even, down 19 cents from last week's close. September whey settled at 67 cents, up 3 cents on the week. And September non-fat dry milk settled at $168.60, down 1.15 cents this week. Class 3 futures found a lot of support from cheese this week, and September rallied 85 cents to settle at $21.57. The October contract rallied 92 cents this week and settled at $20.82. That now brings our 2014 average back up to $21.74 at the settlement of this week. That's a 27-cent gain on that 2014 average this week. So now let's take a look at what we saw in spot cheddar this week. Here we have a chart of our weekly block barrel average. Now, as you can see, if you recall from last week, we did sell off pretty good last week to the bottom end of this range that we've been in for several weeks now. But we were up here this week. There was a fair amount of selling interest, but the buyers are still there and they're still willing to pick up quite a bit of volume around that $2 price. The block barrel average did rally 3 7/8 cents this week. We were below that $2 level, down to about $1.94 at near the lows this week, but we rallied back to that $2 price level by Friday's close, as the buyers were still eager to pick up carloads of both blocks and barrels this week. So that has remained supportive to Class 3 prices, and specifically cheese futures contracts, which have now rallied to a premium to where spot is at. For example, the September cheese futures contract is priced at about $2.05 a pound, whereas the block barrel average settled at $2 even. So if the futures market's looking like it's pricing in possibly a little bit more of a rally in the spot market. However, if we don't see that rally in spot, that could mean that some of that extra premium that's been tacked on could begin to erode away, and that could mean a little bit of risk for Class 3 prices as well. Now let's take a look at what our second month milk contract did. So earlier this week, our July contract did expire at $21.60. So that puts the September contract in that second month spot now, really in the driver's seat here. So as you can see in our second month chart here, things have remained fairly strong in that second month spot. And the September contract rallied a whopping 85 cents here this week. So generally a strong week overall. We did really retest our high here from a week ago. We weren't able to put in a new high on that second month chart. We tested that prior high and we're pushed a little bit lower. So I think we're going to have to see a lot more strength out of the spot markets to see some more strength in this Class 3 market. As I mentioned earlier, cheese futures are pricing in a premium over spot right now, which has really supported this extra premium to be added into these nearby Class 3 futures months of September and October. So I think we're going to have to see the spot market come up and get in line with what the futures market is predicting if we're going to see a lot more strength here. But again, going back to what I stated earlier, if we don't see the spot market continue to rally, that means that there could be some risk for Class 3, and we could see some of this premium that we tacked on here this week really start to erode away if the spot market starts to fall apart. So something to keep our eyes on going forward. Now to get into some fundamentals of the milk market here, we did get our June cheese stocks earlier this week, and it showed that on a year-over-year basis, stocks were still down 8% from where we were at in June of 2013. Now that's up still a little bit from the low when we were down 9% year-over-year. That was back in April. Now, cheese stocks still came in at 1.06 billion pounds for the month of June, and generally we are getting near that point, though, from a seasonal standpoint, where inventories tend to top out anywhere really between that May and July time frame, more typically in June though than anything. But in plenty of years past, we've seen that seasonal high in inventories come in July. So could possibly continue to build inventories and narrow that spread here as we go forward. So we can take a look at cheese stocks here. This is a longer term chart going back a lot farther in time here, and it shows that it looks like we did tick down just a little bit from May to June. Now that could be an early sign that maybe inventories have topped out a little bit, but we're going to have to see how things come in July, because in years past we have seen inventories top out in July, so there's still the opportunity that we could rebuild some of those inventories over the course of the next month here. We'll have to just see what the numbers look like last week, but after July numbers come in, the odds are we are going to see that seasonal decline that we see in cheese stocks when we generally bottom out in that November time frame. So on average though, from the November low to really when we top out in that June time frame, on average each year we see about a 16% growth in cheese inventories. Now looking at this year, from the low that we had put in back in November here to these June numbers, inventories have only rebuilt 7%. So that's a pretty small build in inventories, only about half of what we can expect on average. And it looks like cheese stocks are going to come in lower than where we topped out last year. And you can see that a few years past, we saw that same type of thing happen. You can see where we topped out in that June-July time frame and didn't quite get above these prior year's highs, and then we sold off, or I should say those inventories declined into that November time frame, which is again where we typically bottom out. So the odds are we could see a pattern like that play out here following July into November. Now looking at the week ahead, we will get a dairy products report out later this afternoon, and that will give us our cheese production numbers. So we'll see how cheese production is faring, and if we maybe can expect to see stocks rebuild a little bit more. So tune into next week's video for a recap of that report. Other than that, that's going to do it for us here today. On behalf of the Market 360 advisors here at Stewart Peterson, thanks for watching and have a great weekend.